in a market which is going down, if you get a 30-point gap up, as you explained that we had closed at about 2003, at 12,203 thereabouts. So first up, my tendency would be to go short on the market because we didn't fall because of the virus. We have our own problems. So early morning, first up, you are getting this sort of a gap. It should be used to sell into the market, and then we'll see whether we get follow through on the upside or not. But with a 20-25 point type of stop, at the resistance zones of about 12 270 280, if you keep a stop there, my sense would be that if we don't get follow through, the sellers should be back, institutions are on the sell side, so the evidence has to be more overwhelming before you take the big buy trade. So first up, you try to sell, and then we take it from there. Generally speaking, in downtrending markets, selling the gap often works. Tata Steel is a sell with a stop of 482, target of 460. Auto sales, etc., apparently are lower, so M&M is a sell with a stop of 558, target of 540. PFC is a sell with a stop of 110, target of 100. Tata Elxsi and several other mid-cap IT stocks are moving up. So NIT Tech, Tata Elxsi, etc., they are trading at intermediate highs. So that's a buy with a stop of 948, target of 970. And I think Tata Global 3 or 4 days of consolidation are over and possibly could restart a fresh up move. So Tata Global is a buy with a stop of 380 and look for targets about 405.
Well, I have a different view. Yesterday, I explained that the markets have a very strong support zone at the 12,130, 12,150 area. That's a small area. Now the Nifty reached that support zone almost. It closed at 11,168, which is very close to that zone. They have a gap up. I wouldn't buy a gap up, but I would be a buyer today. So if the markets have any kind of a correction during the day, 20-30 points from wherever the market opens, I would be a buyer and my stop would be 12,150. So the idea is to buy a dip. Now in the very unlikely event that there is no dip at all, then of course the buying doesn't take place, but that shouldn't happen. If there is a dip, I would buy the dip with a stop at 12,150. Well, the idea is to go and buy the Nifty if it comes through a dip, and to go and short weak mid caps. So that's the way I structured the day. The weak mid caps have suddenly become a long list, starting with Hindustan Zinc. Zinc has not participated in this rally, not even in the small metals rally. So chances are that even in a market where the large caps move up, if they move up, these are stocks that will keep on coming down. So Hindustan Zinc is a short sell. Similarly, Indigo is a short sell. After that big rally in Indigo, the Indigo has been regularly moving down. There's probably more downside here. So Indigo is a short. These are all intraday shorts. And Steel Authority, which had a vertical rally, seems to be ready for a correction. It's not a downtrend, but a correction is still a place where you can sell during the day. LIC Housing is a buy. That's the only buy we have.